Let's have more on the main story then, the planned privatisation of Royal Mail. It could be the biggest flotation since some of those big utility companies, British Gas, were privatised back in the 1980s. Let's talk a little more about what the Business Secretary Vince Cable confirmed today in the House of Commons. Just a few quick points. First, the Royal Mail will be sold through a flotation on the London Stock Exchange. We know that. Business is currently being valued, they say, at between £2 and £3 billion. And employees will be given a total of 10% of the shares between them. That's a gift, a move which Mr Cable has described as the biggest employee share scheme for nearly 30 years. So what does all of that mean? And what will it mean for the future of Royal Mail? Joining me now is Stephen Gibson of SLG Economics, a former economist at Royal Mail, so he knows that inside out. Also served as principal economist at Ofcom. Stephen, thanks for coming in.
Thank you.
We'll come to some of the figures in a moment, OK? But viewers watching, wondering whether this will ultimately lead to a very different kind of postal service. What are your thoughts on that?
OK. The first thing to say is that the universal service, the 6 day a week, go everywhere for one price service, is underpinned by legislation. So that will not change. And the other thing to say is that the ownership model is very different from the market. The market is changing and will change whether it's privately owned or nationally owned. And the pressures of the slump in mail volumes, 25% reduction in 4 years, will happen, and the continuation of that will happen under any model, and Royal Mail needs to change under any ownership model. So I don't think it's ownership that's the driver there. It's the fact that we're seeing a very different sort of communications world than we did previously.
With that in mind, we've heard voices today saying, look, this is a flourishing business now, making money. It's not some kind of big burden on the taxpayer. Is that true? And if that is true, does it colour the debate? I mean, should this debate about ownership therefore not be taking place?
Yeah. Royal Mail certainly have increased their profits quite significantly, but they've done that mostly through price rises rather than through efficiency. We haven't seen the effects of efficiency through modernisation really coming through into the figures yet. But the worry is price rises are not sustainable. The ultimate consequence of price rises in the long term is even more volume decline. And that's the real worry for Royal Mail. Can it transform from a letters business to one that is very much more driven by a parcels sector, which has great opportunities, but is also much more competitive?
What's the answer to that, do you think? When you look at the other models around, when you look at the potential competitors in a very commercial world, and we know who some of them are, they're quite big names, what are the prospects for Royal Mail to be competing really well with those kinds of businesses?
Well, one of the things that privatisation does is it gives an opportunity to access capital without having to compete with hospitals and schools and old age homes, etc. It allows the Royal Mail to therefore invest in new machinery to sequence and sort a mail more effectively and efficiently, and to transform the business. And it needs a huge transformation from a letters business with a parcels and packets business piggybacking on the top of that to a much more parcels focused business model.
Over the last few years, we've talked a lot about some of the potential financial challenges or problems facing Royal Mail. The pensions issue was one of them, this black hole in terms of pensions. How does that fit into this picture, and what does that mean in terms of the kind of offering here to the stock exchange?
Okay. Last year, the government took the £8 billion historic pension fund deficit onto its books. So now Royal Mail does not have that historic deficit. So it now has, if you like, a much clearer balance sheet going forward. It still has worries about funding the future pensions of its existing employees, and it is currently negotiating with the unions over that. But the large pension black hole, the £8 billion, has now been sorted, so that's not an issue here.
Just a final point then, Stephen, about the valuation, £2 to £3 billion. I'm going to ask you whether you think that's realistic. And secondly, or does it undervalue it? And secondly, the attractions of giving shares to workers and really hoping that some of the tensions we've been reporting today, not least on the union side, might they be in a way kind of massaged away by this kind of share offer to workers themselves? How will that affect the equation?
Okay, so in terms of the valuation, I think the government is pricing this to sell. It clearly wants to get this off its books, and 2 to 3 billion, if you think about the assets that Royal Mail holds in terms of the value of its sorting offices and property estate is very significant. In terms of the second part of your question regarding employee share ownership, this is a very big change, very different from, for example, the gas, electricity, water privatisations we saw in the 1980s. And the aim is really to change the commercial incentives of not just the organisation at the top, but every single postman and postwoman having around £1,500 to £2,000 worth of shares, having a stake in the business, and really being part of that business as part of owning the business rather than simply being an employee.
Stephen, good to talk to you again, and thanks very much for coming in.
Thank you very much.
Stephen Gibson there.